Hi, everybody. Thanks for joining us today. We've got people joining us for the webinar. We'll give everybody another minute to join before we get started. All right. Thanks, everybody, for joining us today for this webinar on the Biotechnology Investment Incentive Tax Credit, otherwise known as BITC. My name is Matthew Cimino. I'm with the Maryland Department of Commerce, Office of Life Sciences. I'm a Senior Manager of Business Development, and I'm joined by my colleagues in the tax office, Abby McKnight and Jason Sobel, as well as members of the community that have benefited from the Biotechnology Incentive Tax Credit Program, Rick Faint with Aztec Diagnostics, and Angel Kelchev, who's a partner with Ayana Capital. Today's program is designed to give you an overview of how the program works and how the program could benefit your Maryland Life Sciences company. Before we get started, though, I do want to ask everyone to take a quick poll to tell us more about yourself. And we'll take about 30 seconds if you could please answer a few questions for us.
Matt, it says that the cost and balance did not vote, so I'm going to abstain.
Yeah. I couldn't understand why my checks weren't showing up.
There you go. It's good there's so many participants.
Yeah, I appreciate it. I can see everybody's participating. This is great. Just a few more people. I appreciate your feedback. All right. Thanks, everybody. I appreciate your information. All right. Well, let's get started today. Thanks again for joining us. Our goal today is to provide some information on how the Biotechnology Investment Incentive Tax Credit works and how it supports Maryland Life Sciences companies and supports investment in those companies. We have two folks with us that have participated in the program, Rick Faint of Aztec Diagnostics and Angel Kelchev of Ayana Capital. And I'm going to ask them to get us started by sharing their feedback on their experience with the program and how the program has benefited their companies. Rick, can you share a few words with us?
I will. Thank you, Matthew. So I'm the CFO of Aztec Diagnostics, which is a startup medical device company. We are located in the UMBC Biotech Park just outside of Catonsville. And the BITC has been a significant feature of our equity raising program. We have used it in each round, and it's been a feature that has made a significant difference. And it's interesting that when we first started using this, and we would explain to people, particularly sources of capital outside of Maryland, they just wouldn't believe that's the case. So I invest money and the state's going to give me money back. That's correct. but it still counts that I invested everything that I did. Yes, it does. And even if I don't live in Maryland or don't have income in Maryland, I can file a tax return, tell them I got a credit, and they're going to send me money. Yes, they can. Yes, they will. And sometimes people are kind of skeptical at the beginning, thinking maybe it's some kind of a scam or something. But we have been a frequent sender of emails to Jason and his team to get people involved, to work through the program, to invest in us, and to ultimately get the certificate. And I'll add that I invested personally in the first round that we did for Aztec, and I'm glad to report that I got my refund this year that included my tax credit. So it does work. There's no gotcha to this at all. And I would recommend any company that can qualify for the credit, you should do it.
Oh, well, thanks, Rick. That's good to hear. I'm sure other people out there feel more comfortable after hearing words from you. That's fantastic. Angle, can you add your thoughts?
Yes, of course, and thank you very much for the invitation. It's an honor to be on this panel and share my opinion. By way of introduction, I'm a partner at Diana Capital. We are a VC fund based out of Dallas, Texas. We invest across the U.S. and beyond, typically early stage companies, anywhere between seed and Series C. We're generalist investors, but most of our projects are in healthcare, health tech. This is how we came about Aztec Diagnostics 2.5 years ago. We have led the last two rounds of the company and want to participate in the upcoming round, which is pending probably the next 4 or 5 months. As Rick mentioned, I was one of those skeptics initially when I first learned about this program. I haven't really seen anything like it in other states where we invested. And so I was very pleasantly surprised, first of all, by the ease, of which you can actually take advantage of it. It's actually not very administrative heavy at all. Speaking of myself, probably not Jason, who received many of my emails, trying to understand basically what the program is about and how to navigate it. The whole program is taken basically done online. It just requires a few documents that an investor needs to obtain. So, very easy to do. In terms of economics, naturally, if you can get a third of your money back, and in some cases even more, depending on where the company is situated, that's a huge de-risking factor for every investor. We've taken advantage of this program 2 years in a row. As outside of Maryland investor, basically we just received a check as opposed to a credit in our taxes for local Maryland-based investors. And it's been great. The ease of the program and the level of support that the staff has provided to us have been in parallel. And I wish more states out there would do something similar to basically capitalize investments in strategic areas such as health tech and biotech.
That's fantastic, Angle. I'm not. It's great to hear. I'd like to hear the skepticism converted into to support and belief. So that's what we want to hear. So thank you both very much for taking time today to share your thoughts. And if we have any specific questions from the audience directed to you, we'll put them in the chat, and then I'll reach out to you and get the answers from you later, so you guys can go about your day. I know you're busy. So thanks for joining us, and thanks for sharing your thoughts on the program.
Thank you for the invite. Best of luck to you.
Thank you. And I appreciate the invite as well.
Bye.
Next, I'd like to turn it over to our tax team. Abigail McKnight is going to lead us through the details of the program. And Jason Sobel will be in charge of our Q&A at the end of the program. So Abby, you take it away.
Thanks, Matt. Hi, everybody. My name is Abigail McKnight. I'm the tax manager here at the Maryland Department of Commerce. I'm here with my colleague Jason, who is the main lead on this particular tax credit program. We administer about 14 tax credit programs. This biotechnology tax credit is one of our more popular ones. So we're looking to grow businesses and keep Maryland very competitive. And I'm glad to hear that Rick and Angle had positive feedback to give us today. So Maryland biotech companies, they need capital to support their growth. So this program is designed to attract private investment in early stage biotechnology companies in Maryland. When I first started at Commerce a few years prior, the credit actually went to the actual company. Today it actually goes to the investor. When I first came here, we've come very far because most of the information that we're going to be requesting will be on our online portal. We used to have people actually queuing around the building at one time, so it was always an oversubscribed program. Today we have 12 million in funding. We've just entered the fiscal year 2025. We're still working on 2024 and trying to get that closed because there's certain provisions in the law that allows us to be 2 months after an investment, but we can get into that later. So we're going to talk about the process today. And I'm glad to hear that it went pretty smoothly for the two gentlemen who are on here today. Jason and I are always here and available to answer any questions that you have to be able to get you through the process. Next slide, please, Matt. Okay, so eligibility. So it's more of a two-step process. We have a process for the qualified Maryland biotechnology company, and we have a process for the investor. A qualified Maryland biotechnology company has to file what we call a Form B, and the investor has to file a form that we call Form A, depending on whether you're a corporation, a pass-through entity, or an individual. So there's some qualifications that you have to reach. The main one being is that you're organized for profit, primarily engaged in research and development of innovative and proprietary technology that compromises, interacts with, or analyzes biological material. Jason and I's background, Jason is law and I'm tax, Jason is tax too. We will ask questions of our life sciences team that Matt, the moderator, is part of. And so that is one of the main requirements that we will look at, and we will ask for information regarding that requirement. The next one is headquarters and base of operations in Maryland. We have had some applicants in the past that come forward and say, hey, I'm working from a residence, I'm working from home. We do actually need to see something that involves a lease or a rental agreement with lab space. One of the other requirements is that we need one person who is dedicated to research and development, and also that the business has to have less than 50 employees. Also, in active business, equal or less than 12 years. And the main thing is that you want to get qualified as a qualified Maryland biotechnology company. Then we move on to the investor. The minimum investment in a qualified Maryland biotech company is 25,000, and the person can reside anywhere except tax haven jurisdictions. We're going to ask for certified articles of organization, organizing documentation, management, ownership, composition, etc. The main thing is the type of investment. We've got a lot of questions about this, and we can answer them in the chat, or we can answer them whatever pertains to your particular circumstance. We have cash or cash equivalents, and we also include convertible debt. The exclusions in this program is pension plan, individual retirement, or other qualified retirement plan under ESRA. And then an investment made by the qualified Maryland biotechnology company into itself. So you can't invest in yourself. Next slide, please, Matt. Okay, so we just wanted to talk about some of the pitfalls and a lot of questions. These are the main questions that we get throughout the process. So we thought we'd start off by just letting you know a few of them. So an investment cannot be made by or funding directly or indirectly by the qualified Maryland biotechnology company. So you can't invest in yourself. No part of the investment funding can be returned to the investor after the investment. No part of the tax credit can be returned to the qualified Maryland biotechnology company. The investor cannot directly or indirectly own more than 25% of the company after the BITC investment. And we will be asking for capitalization tables to look at that. So each of these things we're going to be looking at, and we can go through it as we get through the process. Founders and current employees cannot participate if the company has been in active business for more than 5 years. Entities owned directly or indirectly by ineligible individuals or entities are also ineligible. Investment cannot be made before Commerce issues initial certificate of approval to authorize investment. Jason and I have seen this a couple of times, and it is one of our main issues that you must get certified by the department, and we will guide you through every single step. Any questions that you have, please reach out to us. Next slide, please. Okay, so what are the benefits of this program? Like we were told by Rick and Angle, we have different levels, different percentages that you can get depending on where you're located. So 33% of a qualified investment. So you're going to invest 25,000 and you can get up to 250,000 tax credit per investor. We also have these enhanced incentives, and at the bottom of the slide, it discusses the RISE zone. These are zones that have already been approved by the Department of Commerce. There's actually 4 right now. And if you're in Allegheny, Dorchester, Garrett, Somerset County, the percentage increases up to 500,000 credits, tax credits. And then we also have something called the opportunity zone. I think we have about 149. There's so many census tracts that qualify for the opportunity zone. We have 149 in Maryland. And then we have 2 different levels. We have level 1 and level 2. There's a 65% and a 75%, which also increases the amount of the tax credit. So if you need any more information about those 2 particular programs, we also administer those programs, so we're able to guide you. Next slide, please, Matt. Okay, so the process. So the best thing to do is you have an investor, an angel investor, and you have a company, you want to invest in the company. We suggest that you talk it through. How is the investor going to benefit? So we suggest that you take these 5 steps in order to get the tax credit. And the 5th step, so you're going to draft the investment agreement, you're going to come and agree to the investment terms, then you're going to apply for Commerce. I'll give you the dates later of when the dates are open, and it's currently open right now. And then we have the investor application. So we have an investor online application queue. And the reason we do this is for fairness, and we have a first come, first serve policy. Because the program has historically been oversubscribed, we need to do it this way so we can treat everybody fairly. Then we have an investor completes the investment in the qualified Maryland biotechnology company and sends proof of investment to Commerce. And we'll be able to tell you the types of proof that we need. And then tax credit, and then hopefully you can file for the tax credit. And if you don't have any state liability, you can get a refund, as Rick had mentioned. There's no ifs or buts. If you meet the requirements of the program, then you're entitled to a refund, or you can apply it against state tax liability. So there's several steps involved with this from an investor side and a company side. So we will guide you through the forms. Next slide, please. So you'll just talk to your investors and tell them what the return of investment will be. And, it's a pretty lucrative program. And then you'll prepare your investment documentations. As you can see in that little bubble or comment box, investment terms must be agreed to within 30 days after the initial certificate is issued. And we can't stress this enough. So when we get to that stage, we will probably most likely remind you that is due within 30 days after the initial certificate is issued. Next slide, please, Matt. Okay. Qualified Maryland Biotechnology Company certification. These are just some of the documents that we're going to ask for. And we do have a copy of the Form B on our website, and it'll give you a list. It'll give you a sample of what we're looking for. Business plan, in depth. We want to know everything about your company, where you currently stand, the early stage. We want to know as much information as we can because we're going to ask questions about it, and it also gets reviewed by our life sciences team, especially about science terms, which I admit I'm not familiar with, but I'm getting Matt teaches me a lot. So then we have employment records. So we might ask for a W-2, we might ask for an offer letter just to satisfy the requirement of having somebody working for the company full time. Intellectual property list and documentation, capitalization tables that will lead to ownership, financial statements. We look at income statements, balance sheets, and then we're going to ask for information about your investment. We need to know the date, the amount, the agreement, the intended use. And then we also are going to ask about current grants and awards that you may have received, and then description of company location, which goes back to the headquarters. So we will be asking for all that information on Form B, QMBC application. And again, it's on the website if you'd like to familiarize yourself with it. Okay, so once we get in this application, Jason is very quick, and I think many people can attest that he gets on it straight away, and he will let you know if there's anything missing, anything further that we need addressed. He'll give you some guidance, and we'll reach out to life sciences with any scientific questions. So there'll be reasons given as to why you're going to be able to continue in the process, or there might be a reason for rejection. There could be a number of reasons. So you can get certified at any time in the process. So right now we're in fiscal year 2025, and up to 2 months after an investment is completed. As I said before, we're still working on some fiscal year 2024, but right now we're in 2025. So next slide, please. Okay, so investor application, we have an online system where you receive a 5-character user ID and a 6-digit reference number. And this begins on September 6th. So it's August the 27th, so we're nearly there. And then you'll get the character, you'll get the user ID and the password, and then you have a user registration information to enter the electronic queue. And then you will register and it will be a first come, first served. We get a lot of applications, so we have to make sure that we're treating everybody fairly. Okay, next slide, please. Okay, so if everything goes to plan, we're going to issue an initial tax credit certificate. And again, it comes up again, a reminder within 30 days, the investor completes the investment. Investor provides proof of investment within 10 days of making investment in the Commerce web portal. So we will be looking out for those timelines. And I do strongly advise that you keep a note of all these timelines. We have seen instances where these timelines weren't kept in line. So it's always beneficial to look at that. Then hopefully we provide the final certificate of approval awarding the tax credit to the qualified investor. Next step, please. So the Comptroller of Maryland is the responsible agency for processing your tax returns. So we issue a final tax credit certificate, and then you have to file that with a form that's called the Form 500 CR, CRW. W means a waiver, but the CR is credit, or a 502C. So these forms, the latest forms that I found on the controller's website were tax year 2023. So we might have to update that when they finally print their next set of forms. We don't have access to tax filing information. We can help, if you have questions with the final certificate that's been issued, but we have a good relationship with the comptroller, and we work together to try and resolve any filing issues. But any particular questions regarding tax, it's probably best to ask your tax advisor. Next slide, please. Okay, so to summarize it, apply for QMBC status. The investor will apply, enter the BITC queue, make an investment, then Commerce will review the application, perform due diligence, and we'll get it turned around as soon as we can. We have a dedicated staff that works very hard on this program. And then Comptroller of Maryland will be the one to process the income tax return and hopefully issue refunds. Next slide, please. So success, we made it through. So we do have some do's and don'ts that we want to bring to your attention. And the main one that we hear a lot about, as I've mentioned before, is the biotech company must maintain its headquarters and base of operations in Maryland. And there's a little note here, a leased or owned business facility, not a personal residence, located in the state where the company's financial, personnel, planning, management, administrative, biotechnology research, biotechnology development, and biotechnology production activities are primarily handled. So we will be asking questions about each of those. Next slide, please. Okay, as we've said several times, don't accept the investment too soon. And then we have a couple of exclamation mark. I'm sorry, Matt. Next slide, please. Thank you. Sorry, my screen froze up. For a straight cash for stock transaction, the entire investment must occur within the 30-day period after authorized by Commerce. This means that the investment documentation is executed and cash is exchanged for stock within that 30-day period. No part of the process can occur to the 30-day period. Then we have convertible debt notes and safes are usable if the following conditions are met. The instrument is no older than 1 year at the time the investor applies to participate in the program. The investment was issued to the investor in exchange for the investment funds. The instrument is converted into stock and stock issued to the investor within the 30-day period after authorized by Commerce. So we can walk you through if you have questions about debt or safe agreements. Next slide, please. Okay, timing of the Qualified Maryland Biotechnology qualification. While the company must apply for qualification as QMBC before the investor applies, QMBC qualification might or might not be issued prior to the investment. As we said, we have a 2-month rule. We're still in fiscal year 2024 for certain companies, but you do have an additional 2 months after your company has received the investment to get qualified. I just wanted to add too that we do have another tax credit program that mirrors this. It's for different tech sectors, cybersecurity, etc. And we did a webinar a few weeks ago about that, but that actually has a 4-month rule. Some people ask, is it 4 months or 2 months? But if you have any questions about BITSI, you're welcome to ask Jason. Any questions about ITSI, you're welcome to ask Jason. He's the program lead on both of them. Okay. So here we're at the QMBC certification. So you apply for certification. So that is stage 2 that we're in right now. Okay, next slide, please. Okay, after investment, investor receives credit by filing Maryland tax return with the Comptroller of Maryland. As you can see, we've just listed a few of the tax credits, the main tax credit forms that you're going to file. Administrative Relief 6, that gives you some information for pass-through entities, which is a little bit more technical. And then we just have the main forms where you would file. And as you can see, the Form 505, non-resident income tax return to claim a refundable tax credit. We get a lot of questions on that. Okay, next slide, please. Okay, so these are the timelines. So as you can see, we opened up the application process for Form B, QMBC, on August the 20th. We've received a few recently, and we're going to be jumping right on them. And then it's going to be September 3rd, another important date. We'll start accepting what we call the Form A, pass-through entities, corporate or individual, through the online system. It has to be done by 11:59 p.m. in order to be eligible for the online electronic queue. Very important. We do stick by these timelines. We have to, because we have to treat everybody fairly. You'll be issued a username and a reference number after September the 24th, 2024. Okay, Next one, September the 24th, Commerce will open the online electronic queue investor registration, which will require investors to use the username and reference number received during the first part of the investor application process. If you have any problems, please reach out to me, Jason, or one of our colleagues, Cindy, who also works mainly on the investor applications. Next slide, please. Okay, contacts and references. So we have a Bitsy webpage that'll give you a copy of the Form B, which I recommend you look at. It'll give you some information about investments. It'll give you timelines of when everything is due. If you have any questions, feel free to reach out to us here in tax. Matt, he can answer general Bitsy questions with regards to the science, looking at your business plan, that kind of thing, and then technical questions. Usually go to Jason because he's the main contact on this program. Any questions with the comptroller? Amy Pode is my contact over there. Great lady over there who's willing to answer tax questions. Or you're welcome to write to taxhelp@marylandtaxes.gov or 1-800-Maryland-Taxes. And you can check status of the current year filing or refund. They're always very helpful when I call over there. Next slide, please. Okay, so if you have any questions, feel free to ask us in the chat. As I said, we're always here to help whenever you have any questions. Jason is great. He always gets a fast turnaround time, and I think he's probably come across most of the questions that we're ever going to get. He's been working on the program for a while, and even if we don't have the answer, we'll find out the answer for you. So I'd like to turn it over to my colleague Jason. And if you have any questions in the chat or any questions direct, just let us know, and we'll go from there. Thank you.
Thank you very much. And I want to invite everyone, if you have questions, you can submit them through the Q&A feature in the Zoom Workplace app, and I will do my best to answer all of them. The first question, Rick, you may want to chime in on this if you're able to. The question is, how many years did it take from investment to receiving the credit? And the
Yes. So the way it goes is the credit gets issued in the year when you invest the money, and then the very next tax return that you can file, you get your refund. So it's you're going to get it within 12 months, but it's just like a paycheck that you get, you pay the tax on in 2023, but technically you're not filing the return till 24. So if you make an investment in calendar year 2023 and you get your certificate, that certificate goes with your 2023 return. So it's you get it whenever you get around to filing your tax return.
Thank you, Rick, and that's exactly right. So for the year we just opened, fiscal year 2025 program, if the investment is made through the program in calendar year 2024, the investor can claim it on their Maryland tax return for tax year 2024, which they could be filing as soon as January 2025.
Yes.
If they make it in calendar year 2025, then it does add, like Rick said, up to 12 turn. All right, thank you again, Rick. And the next question is asking, can a CEO invest in the company and get benefits? And how does it impact the credit if they're not receiving a salary? So the answer to the first part of that question is that it depends. The statute allows current employees and founders to invest in their own company if participates in the program can own more than 25% of the QMBC. So even if the company is 1 year old, if the CEO owns 75% of the company, they won't be able to invest. But assuming that the company is less than 6 years old and the CEO does not own more than 25% directly or indirectly, and by that I mean that we follow attribution rules from the IRS, so you're attributed the ownership that may belong to your parent or your child, or if you own some of the stock through an LLC that's in your name as well as owning directly, all of that's attributed to get to that possibly 25% threshold. But it may be possible for the CEO to participate. And to the second part of the question, it doesn't matter directly if the CEO is paid by a salary or stock options or not compensated at all. We look at a holistic approach to what an employee is, and the CEO is going to be quintessentially an employee, whether it's technically a contractor or technically unpaid. You're also likely, if your company is early stage enough, to be within that 5 years to be a founder of the company as well and be disqualified under that rule. So in either event, it is possible for a CEO or any current employee to participate if the company is. The next question from an anonymous attendee is, does Commerce keep a list of investors by sector of investment? So me as the program administrator, I don't give out lists of investors to anybody. I also won't give out the names of companies that are participating as QMBCs. There are certain statutory reporting requirements, and some of that data might be ultimately might include the QMBCs, and that might include investors who have benefited from the program in the past. But that's something that we do not directly give out ourselves. And I apologize, I skipped a question, which is, does receiving warrants qualify as an investment? So the statute has a specific definition of an investment, which is when you exchange cash or cash equivalents for stock or equity in the biotech company. So a warrant itself is not ownership in the company. It's an option to buy stock at some future date for a certain price. So just having a warrant on its own is not an investment. It can potentially trigger an investment under the BTC statute, though I do want to caution that we've never directly dealt with a situation where an investor is buying through a warrant. But if the purchase is made as authorized by Commerce pursuant to the timelines that Abby. The next question from Dan is, how do you determine an opportunity zone? Abby may want to jump in on this because she's more of the expert, but opportunity zones are a federal designation, not a Maryland designation. Abby, did you want to add into that?
Yes, can you still hear me?
Yes.
Okay. Okay, so an opportunity zone, the Maryland Opportunity Zone is actually run by the Department of Housing and Community Development. So opportunity zones were added to the tax code by the Tax Cuts and Job Acts on December 22nd, 2017. And in Maryland, there was 589 census tracts that qualified and 149 tracts were allowed to qualify as per the program rules, because opportunity zones are based or determined by economically distressed communities where new investments under certain conditions may be eligible for preferential tax treatment. So I think one of the requirements is they are in a low income census tract with an individual poverty rate of at least 20% and median family income no greater than 80% of the area median. So we have a total of 149 opportunity zones. And I was just looking at, there was another question about opportunity zone. Sorry, I did see it. So Dan asked, how do you determine the opportunity zone? And I just thought I saw another opportunity zone question. So I hope that answers your question. If not, feel free to give me a call, or Frank Dixon at the Department of Housing and Community Development. He works a lot on the opportunity zone. Thank you.
Thank you, Abby. So the next question is about our headquarters requirement. Do you have to occupy wet lab space to be considered an eligible QMBC, or is an office space okay? The answer, like a lot of answers about this program, is it depends. What the requirement is among other things, that your R&D work is primarily done here. So your headquarters has to be equipped to do your R&D work. If that means that it requires a wet lab space, then we're expecting you to have a wet lab space. If your R&D work doesn't require that, then we wouldn't require that. So it depends on what you're doing and what you need to do it. And you need to show us that you are able to and are actually doing it in your Maryland headquarters. Does the investor have to be in an opportunity zone to invest in a company in an opportunity zone to get the level 1 or 2 enhancements, or do they only have to invest in a company in an opportunity zone? So we haven't gone into the details of opportunity zone investing because it's very, very complicated. The short answer is the investor doesn't have to be in an opportunity zone, but it does have to be a qualified opportunity fund. That is a designation that falls under the Internal Revenue Code, so it's administered by the IRS. Most investors are not qualified opportunity funds. Individuals are not qualified opportunity funds, and most entities aren't qualified opportunity funds. So if you're seeking opportunity zone investment, you're going to want to look into those federal rules for what that designation requires and make sure that the entity that's being set up to invest in your company is meeting all of those requirements. The next question is, can you explain again the 30 days related to authorization of the Form B? Should we wait to go to the investor until we get approved as an eligible company? So there's two questions here, and I'm gonna flip them around. The first thing is most companies that participate in the BITC program are already talking to their investors before they even apply. They're using their participation in the program to encourage interest in participating and hopefully getting more investors and more money coming into their company. So most likely you're already talking to them. And if you aren't, you probably should start doing that now. The 30-day period is dictating when the investment has to be very tricky with the timelines that Abby was talking about. Your company can be qualified as a QMBC anytime from before the investment is made up to 2 months after the investment is made. And the entire time the review of your company's application is going on, we're working with your investors. So your investor can apply and be approved to make the investment and make the investment all before your company qualifies as a QMBC, or they can make the investment after your company qualifies as a QMBC. It just depends on the timing of the program, but we build in that 2-month qualification period after investment so that you do have time to get all your ducks in a row and make sure that you meet the requirements of the program. The 30-day period that you keep hearing a lot about, which is the most important period for the program, is after your investor applies to your investors. We have to do this because sometimes we have more investors than we have money. And we will go through, we'll figure out how many investors can initially receive funding, and then we'll review those applications. And if all goes well, your investor will receive what's called an initial tax credit certificate. That document authorizes them to make the investment, and it specifically requires that they make the investment within 30 days of the date on the certificate. So that's that 30-day window. The investment has to happen within that 30-day period. If you're doing a straight cash for stock transaction, that means the entire transaction occurs within that 30-day period from executing the agreement and receiving the cash to issuing the stock to the investor. If you're doing a convertible note, you can receive the cash and issue the note ahead of time, but the note has to be converted into stock within that 30-day period. All right, the next question is, does this cover international investors if they have offices in the US? So there is no requirement for the investor to have a US presence at all. We've had investors from multiple continents and many countries around the world. No US presence is required. However, the statute does require that the investor be required to file an income tax return in some jurisdiction in the world, which is intended to exclude investors who reside in tax harbor countries and are not subject to income taxes. So most countries, your investor would be able to participate even if they never come to the United States, never set up an office, have never even set foot here. Okay, the next question, can you repeat the answer to the owner investing? The speaker cut off. I am sorry about that. 2 rules. The first is that the investor can't own more than 25% of the company. So that doesn't matter if it's the CEO, an employee, or just an owner who is not actually working for the company. No investor can own more than 25% of it and still get the tax credit. The second part is that if the company has been in active business for more than 5 years, founders and current employees are not able to. So if you're under 6 years of active business, then the CEO can potentially apply and participate in the program. The next question, and we still have time for a few more, so please keep them coming, is does investment from a publicly traded European company qualify? So this can get very complicated because I am not an expert on the different business structures of every part of the world. So it may require some research, but potentially yes. We need to make sure, as I said before, that the investor is subject to income tax in some jurisdiction. And one of the issues you may come into with any publicly traded company, whether it's European, American, or otherwise, is that you have to disclose who owns your company, because we need to make sure that there's nobody investing through the investor that is ineligible to participate themselves. So a publicly traded company could potentially have thousands of owners, and that may be a problem for you to provide that information. But in theory, they can participate. There was a definition of less than or equal to 12 years of active business. Kindly define active business. So active business is something we take in a holistic approach to. It is more than just being legally organized. So your company can be organized. You can even be doing some work raising in funds or something like that, or the CEO could potentially, a lot of times these companies are started by a scientist who has an idea and he could be doing some work and have a legal company organized. But what we're really looking to see for active business is that the company is an established bona fide company that is doing the work of the company. So we're looking at a wide variety of things. Have you received grant funding from the government? Do you have employees? Do you have patents? Do you have a business space? And we're looking at all of that together to determine whether a company is in active business and how long they've been in active business. That question was from Charles. If you have specific questions as it pertains to your company, please shoot me an email afterwards and we need determination. The next question is, for safes, does the trigger event where the investment becomes stock need to we have to allow them, we have to use the rules for convertible debt, which means that the safe has to convert into stock within the 30-day investment period after the initial certificate is issued. So yes, whenever that initial certificate is issued, you have 30 days to make the investment. And if you're using a safe, that means you have to convert that safe into stock or equity in that period of time. The next question is, does the minimum employee R&D requirement qualify if the CEO and the employee is both, especially if the company is very new? Okay, if I'm understanding that question correctly, it sounds like it's asking, can the CEO be the full-time R&D employee? And the answer to that question is no. The R&D work that we're looking for by that employee is time R&D employee. So any executive CEO or otherwise, CSO, CMO, CTO, none of those would qualify to meet that requirement. And if I misunderstood your question, please jump in and rephrase it. Okay, clearly, okay, I think this is Charles again. Charles, I will get back to you. I've been breaking up on some of these answers apparently, and I apologize for that. The next question is, if the R&D vendors are located out of Maryland, is that okay? So again, the answer is that it depends. You need to be doing R&D work in the state of Maryland, and it needs to be the primary focus of your company. If all of your R&D work is being done by contractors, whether they're in Maryland or not in Maryland, then your company may not qualify anyway. You can have contractors doing work out of the state, and things like clinical trials may occur throughout the country where the facilities are and the experience and expertise is to do those things. But you do need to be doing R&D in the state, in your headquarters and base of operations, in order to meet the definition of a QMBC. Matt, feel free to chime in on this one. Biotechnology, is it different from pharmaceutical technology? I represent a pharmaceutical company working on AI and I don't want to go into all the details here involving certain condition. I don't know if I should share that, but Matt, do you want to take a look and give that an answer?
I think that this is going to be, I'm going to take a page out of your playbook, Jason, and say it depends. We'd have to learn more information about what you're doing. The Maryland statute's pretty descriptive and pretty detailed about what is and what is not biotechnology, but we could work together to investigate your particular situation. But as long as your pharmaceutical agent is taking action on tissue or organs, I think we'd be in good shape, but we'd have to learn more information about your R&D project.
Great. Thank you, Matt. And Andres, if you want to shoot me an email afterwards, I can give you like Matt said, the regulations of a very long and specific depth.
See, we're sadly having problems with Jason's feed this afternoon. Let's see.
Are you able to hear me?
We're doing pretty good. That was a pretty long pause there.
Sorry.
Let's keep.
Yeah,
I
let's
think we
keep
can
it
move
moving.
on.
Yeah.
Go ahead, Jason.
The next question is, how does an international investor get the money? all of the tax credits are awarded by Commerce, but then the investor has to file a return to claim them. Whether they're residents or non-residents, they still file that tax return. So they'll get the actual refund by whatever mechanism they request on the Maryland tax return. It's usually a check or direct deposit, depending on the taxpayer, but that is unfortunately more of a comptroller question. I know there are some rules about how money can be sent out of the country, and I don't want to speak on that too directly. The next question, what happens if a convertible note is not converted into equity within 30 days if you were approved for that investment? If not converted within 30 days, does the refund get negated? So if Commerce issues an initial tax credit certificate to an investor using a convertible note and they do not convert it within 30 days, the investor is not awarded the tax credit. There's no refund to negate because you don't claim the refund until you're awarded the tax credit. So you just don't get the tax credit. You never claim it. You never get to the step of putting it on your tax return. All right, the next one is to further clarify the founder as an investor. If the founder operates a special purpose vehicle, the SPV would own less than 5% of the company. Is the SPV eligible as an investor? The answer is if your company is over 12 years, but you have not been actively taking investments for 12 years, can you qualify? So the answer is maybe. We take a case-by-case approach for every applicant about this, but active business involves a lot more than just legal existence. So it doesn't mean you're taking money the whole time, but what is your company doing throughout? And those are two very different things. However, their active business has only a little bit to do with whether you're receiving investment money. You can be an active business even if you're not receiving investment money.
Jason, I'm just going to try to summarize there. You broke up on us just for a little bit. So I think for Sue Carr's question, it kind of depends on what your business was doing during that time period. And the team would have to take a look at case-by-case situation to see if you would be excluded or not. And Jason, if you could just briefly go back, was there a yes or no to the SPV question? Because your feed was lost for a big chunk of time during that question.
Great. I'm sorry that you're all watching me talk or freezing and not. A lot of these questions, it depends. If the individual who is a founder is eligible to participate in the program, then they can do so through an SPV. If they're not eligible to invest directly, they are not eligible to invest through an SPV. You can't just create an entity to invest through to get around those rules that say you're ineligible. The next question, can you elaborate on biotech as it pertains to a software diagnostic device regulated under the FDA as a software as a medical device? Matt, again, that's as a scientist, that's more a you question.
We would have to take a look at your the intellectual property and match it up against the statute. But there are provisions within the statute that would allow certain software services to be considered biotechnology. So that's a great question. But let's take a look at the specifics. And thanks for participating in the program and look forward to hearing from you.
All right, we are starting to run out of time, so I'll try and get through the last couple questions if we can. If the R&D work is being done by a lab associated with a local university as part of collaboration with the company on a federal grant, does the company have the possibility of qualifying as a QMBC? Like a lot of these answers, it depends. Your company, the company trying to qualify, has to be conducting R&D on innovative and proprietary technology that has to be on IP that belongs to your company. The next one is specific to that company, and it's getting into that active business question. So I'm going to ask you just to shoot me an email and we can set up a time to talk to go over your company's details. Down to the last two questions. If an individual invests on a convertible note, must the convertible note be converted into equity within 30 days in order for it to qualify? Some of the earlier questions, but yes, it has to be converted into stock in that 30-day period in order to qualify. And our last question is, if the business is active overseas in an incubator environment and moved to the US less than 12 years ago, can the company qualify? So I think what this is asking is, does the company have to originate in the US or Maryland in particular? The answer to that question is no. What we're looking to see is whether your company is right now a Maryland company with its headquarters and base of operations in Maryland. We will consider, for purposes of determining how old your company is, that it existed previously and was in other countries, and we're going to look at that. But it doesn't disqualify you from being a Maryland company because you were organized in another country or operated in another country.
All right. This has been fantastic. Thank you, Jason. Thank you, Abby, for walking us through the program. Again, thanks to Rick and Engel for providing their personal experience with the program. As always, if you have any questions, please follow up with us directly to learn more about the program. You can email us or call us. This webinar will be available for download. Keep an eye out in our Life Sciences newsletter and through LinkedIn for information on how to access the information. So thanks again for joining us. Appreciate your time today.
Bye-bye.